Okay, so let's talk about how do we actually determine our break-even point. We'll walk through a little bit of an example here. So let's say that we are going to, and this example is in your book, this is what the book's been uses in the text. So let's say we're going to sell hamburgers at university football games or some sporting event at the university, and we have our costs listed out here before us. So we can see that the material costs of our hamburger are 60 cents per hamburger. Instead of paying our employees a salary, we simply pay them 50 cents for every hamburger they sell. Okay? The university charges us $600 flat fee per game to set up a concession stand. We have to rent the grill every game, and that's $100 per game. Again, that's a fixed cost. Our miscellaneous supplies we've estimated are $3 per game. These are things like plates, napkins, ketchup packets, that kind of stuff, right? And then we sell each hamburger for $3 a piece. So we can see that our selling price is $3. Our variable costs are $1.10. That's 60 cents in materials and the 50 cents in labor. That makes our contribution margin $1.90. So we take our $3 selling price, we reduce that by our $1.10 variable cost. That gives us a contribution margin of $1.90. And then we have fixed costs of $703. That's the $600 concession fee, the $100 grill rental, and then the $3 for miscellaneous supplies, the ketchup, mustard packets, plates, napkins, that kind of thing. So let's determine the break-even point. How many hamburgers would we need to sell to make $0 and to lose $0? How many hamburgers do we need to sell so that our revenues equal our costs? Well, since at the break-even, the profit is $0, we substitute 0 for P in our formula. So we have fixed cost plus 0 divided by our contribution margin equals our units. So this now is very simple. $703 is our fixed cost plus $0 profit. The sum of that divided by $1.90 equals the quantity of units we need to sell. The quantity happens to be 370 hamburgers. This tells us that we need to sell 370 hamburgers to make $0. That is our break-even point in units. Okay. So we can actually also find the break-even point in dollars. How many dollars do we need to make in order to make $0 in profit? So we do that by finding what we call the contribution margin ratio. So that's simply the contribution margin per unit, which we just found over here, right? So $1.90. That's going to be that contribution margin per unit divided by the selling price per unit, $3. So here we can find it's 0.6333 or 63.33%. In this instance, I would be fine with just rounding to the nearest hundredth, right? That's perfectly fine. The reason we leave it here at the 10,000th range is because when we do percentages, I do like to see two decimal points for your, or two decimal places for your percentages, so 63.33%. So it's up to you. You should get close enough either way. On your exams, on your quizzes, I give a plus minus amount that is still correct. So as long as you're within that range, we're fine. So just that, I'll leave that up to you. Just know that I prefer the 4 decimal places when we're doing percentages. So 0.6333. 3, right? So anyways, $703, that's our fixed cost, plus $0, our profit divided by our contribution margin ratio, which is 0.6333. That is going to give us $1,110. We now know that we need to sell $1,110 worth of hamburgers in order to break even. Okay. We can also now determine our target profit level, right? We can determine our break-even points with a target profit level. So let's say that we want to make $150 in profit per game. We simply replace the $0 equals profit with $150 equals profit. So now we've got our $703 fixed cost plus $150 target profit level divided by our contribution margin per unit, $1.90, and that gives us 448.95 hamburgers to break even. Somebody is not going to let you take a bite out of their hamburger so that you can get it down to a 95% of a hamburger, so we will just round this up to 449 hamburgers to break excuse me, not to break even, but to reach that $150 target profit. Now, one thing that we also have to take into consideration is that in the United States of America, we also have to pay taxes, right? So we have to determine our target profit level after taxes on occasion. So let's say we still want to make that $150 in profit per game, but we are subject to a 15% tax. Maybe that's local, maybe it's state, maybe it's federal, we don't know, it's just a 15% tax. So we simply still replace the $0 in profit with $150 equals profit. And then we use this formula. After tax profit equals before tax profit minus before tax profit times the tax rate. We can rearrange this formula, and once we do, we get down to after tax profit divided by 1 minus the tax rate equals before tax profit. Okay, so we can see that our fixed cost is $703. We take our we're going to take our after-tax profit, $150. We're going to divide that by 1 minus the tax rate. So what we'll get is 0.85. And then we're going to divide that all by our contribution margin. So we're using our break-even formula. We've just added a little chunk in there, right? We've added our tax rate, okay? That 150 divided by 0.85 is going to tell us it's going to increase that 150, right? We're dividing by a smaller denominator, so it makes the answer bigger, right? Just fractions, yay. So once we do all that, we can see that we need 462.88 hamburgers. We're obviously going to round that up to 463 hamburgers to break even. So you can see we've got to sell an additional 14 hamburgers if we have a 15% tax rate in order to make the $150 profit that we would like to see. So if you have any questions about either of these so far, please feel free to email me or set up an appointment, whatever the case is, and we